IBM just erased nearly $100 in market value after earnings, and the charts have completely changed. Is this the buying opportunity everyone has been waiting for, or is IBM about to continue its collapse towards $200 or even lower? Now, before we get into the top-down analysis, I want to go over this winning trade that I gave you guys on the daily chart. I gave you guys this falling wedge with the measure move taking us to about $345. The entry was around $266. We didn't do the whole measured move, but we made about half of the measured move, taking us to about $311. So congratulations on whoever took this trade. This is a big win for the FlexCandle community. Now let's start off here with the monthly chart. The price of IBM is currently at $214, and as you can see, for the month of July, we're doing really bad. We still have about 15 days before this candle closes. We are well below the 21 moving average, and this looks like we want to head down to this 50 moving average, which is currently at $200.42. We take a look at the Stochastics RSI. They're low, but it looks like it wants to roll over, and the RSI is below the 50 and it's pointing straight down. So this looks like the next move would be to $200 here. Hopefully we could get a bounce. If not, we could even fall down to this 80 moving average, which is around $172. We head over to the weekly chart. You can see that the stochastics are toppy. We're rolling over. The RSI double top here. We're below the 50, also coming down. And this week alone, we pretty much lost $100, pretty much coming straight down. We lost the 50 moving average, the 80, the 21, the 100, and now it looks like we're headed for this 200 moving average at $203.93. Now, if we do close the candle like this, maybe we do get a bounce from the 200 moving average. We are getting far away from the 21 moving average at $251. So maybe a relief rally might happen, but we have to see how this candle closes by the end of the week. Now, if we head over to the 3-day chart, again, is looking bearish. We're below the 50 on the RSI. The stochastics RSI still have more room to continue to go down. And this is a clear double top pattern. You have one top, two tops. We really broke the neckline here and really made most of the measured move. Now, I would say that we have two possible scenarios here. The first one is we could possibly continue to fall down and go as low as about $175. Or if we're a little bit more conservative, we could probably still go down and make it to about $185. With the stochastic still rolling over, it looks like we could still make the rest of this measure move for this double top pattern. So if we break that $200 level, it does look like we could be heading down to $190 to even down to $175. We head over to the daily chart. Stochastics still have room to continue going down. The RSI is starting to get pretty oversold here, but as you can see, we've dropped down below all the moving averages. Now, we are far away from the 21 moving average, which is at $271.79. So it's possible that maybe we get some type of a relief rally, maybe even to this 100 moving average before rolling over more if we continue to be bearish. It's also possible that we go here sideways and wait for this 21 moving average to catch up to price, and then we roll over. We did drop drastically already, almost $100. It's possible that we could continue to go down, but more than likely, I think we might stall here, maybe get a little relief bounce and then roll over, or just continue to consolidate here sideways before continuing to roll over. On the 4-hour time frame, we see that the stochastics are getting low, the RSI is low, we are below all the moving averages again, and again, we're far away from the 21 moving average. So I could see us getting a nice relief, maybe to test this 200 moving average at $252. We see the gap here in the VRVP. Usually when there's a gap like this, we could fly up to the next node here, and this is going to tell us a lot. If we get rejected off of this 200 moving average, then we're probably going to continue rolling over. If we could get back above this 200 moving average, then things could start to turn a little bit more bullish, and slowly we could climb our way back up. I believe that ultimately we would have to get back above, definitely above this 200 moving average, but we would have to get back above this 21 moving average, pretty much at $280 to reclaim some bullishness. If we get rejected from any of these moving averages, I think that we could continue to go further down. On the 1-hour time frame, stochastics here are low, but we kind of look like we're about to roll over. We're going sideways here. This kind of looks to me like some type of a bear flag. 21 moving average right now is up around $248, and this looks like it's crossing down. If we touch price and we're not able to make it back above the 21 moving average, I think that this bear flag would play out, and again, this will possibly take us below $200. In the 15-minute time frame, stochastics are moving up, but we're starting to get a little bit toppy here. We do have some bullish divergence, but as you can see, we haven't been able to make it back above the 21 moving average. This is very bearish. Ultimately, again, we have to get above this 200 moving average on the 15-minute chart. That's at $280. If we cannot get back above the 200 moving average on the 15-minute chart, then we're not going to be able to make it on the higher time frames either. So this is imperative that we get back above this 200 moving average. If not, more downside is to come. So guys, overall right now, IBM fell off of a cliff. I'm expecting a possible relief bounce, but ultimately, unless we could recover certain moving averages, it does look like we could be heading as low as 175, if not possibly more conservatively testing the $200 range. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.